Well, hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, plenty to discuss this morning. The US Fed has hiked rates by 25 basis points. Global markets looking extremely weak with the SGX Nifty giving out weak signals for the Indian markets. And of course, we'll also be discussing stocks like HAL, GAIL and Hero MotoCorp. So, and of course, we'll also be getting your queries answered by our technical expert on the show. So if you have any stock-related queries, don't forget to shoot them on our live feed on YouTube and we'll have them answered. But before we do all that, let's take a look at the top headlines. US Fed hikes rates by 25 basis points. Chairman Jerome Powell indicates that hikes may be coming to an end, but dashes rate cut hopes for the remainder of the year. Treasury yields drop and stocks close sharply lower. Regional banks slump as Treasury Secretary Janet Yellen rules out blanket insurance for bank deposits. Fed Chairman Jerome Powell reaffirms his confidence in the banking system but says that the recent failure of some regional banks could cause ripple effects that could slow down the economy. Also assures Americans that the Fed has the tools to keep depositors' money safe. Asian markets open weak but come off lows as investors digest the US Fed's rate hike. The SGX Nifty is indicating a weak start for the Indian markets. And stocks in the spotlight today are HAL as government launches offer for sale for a maximum of a 3.5% stake. Also in focus are Hero MotoCorp and GAIL. Well, before we get on board our guest Peter Cardillo of Spartan Capital, let's listen in to what the Fed chairperson Jerome Powell had to say in the press conference yesterday, and of course also Yellen's comments on bank deposits that led the US stocks lower in trade.
Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. We published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
This is not something that we have looked at. It's not something that we're considering.
Dan,
I have not considered or discussed anything having to do with blanket insurance or guarantees of all deposits.
Well, let's get on board then. Our expert who's joining us from New York, we have Peter Cardillo joining in. He is, of course, Spartan Capital, head research. Good morning, Peter. Good to have you on the show. First of all, Fed has hiked rates by 25 basis points as was being expected widely. What are your initial thoughts about what the Fed chief had to say in the press conference?
Well, I don't think the hike of 25 basis point really scared the market at all. In fact, he alluded to the fact that we're getting close to a terminal rate, which means a pause. I think what happened was the comments by Secretary of the Treasury Yellen, who alluded to the fact that there's no blank insurance for all the banks. And when she said that, obviously the banking stocks began to move lower and it dragged down the rest of the market.
Right. Powell has again hinted at another 25 basis point rate hike for this year. But he has also dashed hopes of a rate cut in the second half of the year. Well, that was something that, analysts were penciling in light of the banking crisis that has been unfolding in the US. But, when it comes to the fight against inflation, do you think this whole crisis, the Silicon Valley Bank crisis, has actually come as a blessing in disguise when it comes to the inflation fight?
Well, I don't want to say it's a blessing in disguise, but I think it, certainly it puts the brakes on the Fed. No matter how you cut it, I think we're headed for a recession. So once we know what type of a recession we're headed for, then I think that clears the air, because the market has already discounted a recession, and the bond market is not only discounting a recession, but it's betting on that there'll be 1 or 2 price cuts, rate cuts by the end of this year. I'm not too sure if we'll get 2, but I think if we wind up in a recession that's a bit more than what the markets are expecting, then the likelihood of a rate cut is very possible, in spite of the fact that the Fed chief has basically ruled it out.
Well, there still are chances of a rate cut this year, according to Peter. But Peter, tell me, do you think this entire banking crisis has been contained for now? Given the fact that we have been able to, backstop deposits and avert a larger crisis. But do you think there are more such failures to come, or do you think it's kind of done now?
I don't think it's done. I think there's probably 1 or 2 more banks that are going to wind up, let's say, in trouble. And the reason for that is, when interest rates go high and these banks are leveraged to the gilt, it's obviously that you can have another bank that's going to implode. The question is, how big the bank is. I don't think we're looking at any major bank. No, absolutely not. But some small regional banks, I think so.
Right. So some small regional banks are also at risk of imploding. But tell me, how do you expect the US markets to pan out in light of the kind of messaging that has come out of Fed, and of course the conflicting view coming out of Yellen's speech as well? How do you expect equities to pan out over the next couple of months?
I think we stay in a trading range. I think the S&P stays within the parameters of 3850. 4150 on the high side, maybe 4200, but I kind of think that's pushing it a little bit.
Right. I think, with that, we are done for the day. Thanks a lot for joining in, Peter, and sharing your thoughts with us and putting things into perspective for us. Well, let's now shift focus to some market technicals then. Shrikant Chouhan from Kotak Securities is joining us. Good morning, Shrikant. Good to have you on the show. Last night we saw the Dow tumble over 500 points, even though yesterday we managed to end around that 17,150 mark. This morning SGX giving out weak signals. Where do you expect the markets to go in terms of levels today?
Yeah, good morning. I think these markets are very well prepared for the decision, and it was in line with the expectations. So we are of the view that now 17,100 to 17,000 is going to act as very good support for the market. Till the markets are not breaking the level of 17,000, we are expecting market to move towards the levels of 17,300. Yes, the upside is limited, but yes, we are expecting some positive bias, and we should be buyer if there is any correction. For the bank Nifty, there also we feel that 40,200 going to act as resistance, and on the downside 39,800 is the level where we should look for adding some long positions.
Right. So those are the levels to watch out for on Nifty and Bank Nifty. Shrikant, the stock of the day for me today is HAL. The government has, in fact, kicked off its OFS to sell a maximum of 3.5% stake. Now, floor price has been set at 2,450 rupees a share, which is at a 6.5% discount to yesterday's close price. The stock has lost somewhere around 4% over the course of the last 5 trading sessions. How much more of a downside would you expect in today's session?
Yeah, I think based on charts, fair chances of hitting 2,400, 2,450, which is the lower boundary of the entire trading range of the stock. Most of the time, the stock has taken support somewhere close to 2,400, 2,500 whenever there was weakness from the levels of 2,700. So I think there again the stock should stop and reverse.
Right. So that's the call on Hindustan Aeronautics. Let's also shift focus to GAIL. That's one counter that's in focus, given the fact that there has been an increase in tariff by somewhere around 45%. Market, in fact, analysts were expecting somewhere around 45 to 50% or thereabouts, and it's come in pretty much as on expected lines. But Street is expecting this tariff hike to boost the financial performance and revenues of the company. For something like GAIL, would you expect this counter to head higher from current levels?
Yeah, looks like, because the stock is like facing multiple positive news flow based on fundamentals or based on the overall outcome from the policymakers. And whenever the stock has fallen, it has taken support of the previous low, and it recovered back and passed its previous high. So while looking at the current pattern, we are of the view that yes, again, the stock has corrected to its important levels on Wednesday, on Tuesday. It was around 102 levels, 102, and from there again it recovered back to 105, 106. Based on the overall formation, we are expecting stock to move towards 115 or maybe 120 in the long run. But in the short run, we are expecting stock to move towards again 115 levels. So it's a buy at currently.
Right, so that's the call on GAIL. The next stock on my list is Hero MotoCorp. The company has announced a price hike of up to 2% on select motorcycles and scooters from the 1st of April. Stock is down somewhere around 5.5% on a 1-month basis. But if you look at the entire auto basket, Tata Motors, M&M, all these companies, have been in news given the fact that they have been planning to raise funds for EV arm. Among the auto pack, which stock is looking more attractive right now? Would you go for 4-wheelers or 2-wheelers now?
Yeah, I think, see, based on the overall formation, we should go for buying 4-wheeler companies because they are doing much better as compared to 2-wheelers. And in that space, we like 2 stocks, Tata Motors as well as Mahindra & Mahindra. Mahindra & Mahindra fallen to its extreme level in last 1 month of time because of specific news flow on the El Nino side. So that's the reason the stock has fallen. But I think it is now available at its crucial support levels of 1100 or 1150. From here, again, the stock can move towards the levels of 1300 or maybe 1400. So it's a decent risk-reward ratio for those who are like buyer with a positional view. Also, we like Tata Motors because there also we feel that 400, 410 is acting as major support for the stock whenever there is a weakness in the market. This time also, after hitting the levels of 410, it recovered back. And here also we are expecting range bound activity, but 450 seems achievable. So again, it's a buy. So Tata Motors as well as Mahindra & Mahindra both should be on the watch list to buy and hold.
Right, Tata Motors and M&M are 2 stocks that look attractive in the auto space. Let's also shift focus to the fertilizer space then. Coromandel International is one stock that's in focus, given the fact that it will be foraying into CDMO business, which is Contract Development and Manufacturing Organization. Now, this company is going to expand operations in crop protection chemicals. Now, it is entering into specialty and industrial chemicals as well. Over the last 6 months, stock has lost somewhere around 15%, but it has come off its 52-week lows. What would you advise investors to do with some of these fertilizer stocks now?
Yeah, in fact, Coromandel Fertilizer is like holding well above its 52-week lows since last almost 1 month. It was rebounding whenever there was a fall in the stock. And yesterday also, when there was like some weakness, we saw some recovery towards the end. So it clearly shows that the stock is stabilizing at current levels around 860, 870 levels. In the worst case scenario, we may see the levels of 840, which was its 52-week lowest levels. But on the higher side, again, the stock can move to the levels of 1000. So certainly it's a buy. And in the long run also, we are expecting stock to move towards 1100. So certainly it's a buy at current levels.
Right, Coromandel International, a buy at current levels. Let's take up some queries that are trickling in this morning. First query comes in from Madhuri, and she wants to know your thoughts on Biocon. If I'm looking at the last 5-day chart, it has lost somewhere around 9% or thereabouts. But it did manage to clock a 1.5% up move in yesterday's session. Should one look at buying into this now?
I think it is better to stay away from taking any specific position in the Biocon. If there is like any investment or old investments, then one can hold on to it because the stock has fallen badly from the 500 to almost 200 levels. Again, we can expect some rebound, but with a fresh investment view, certainly we should avoid. There are many more companies in which we can invest and hold.
Right, so avoid Biocon at current levels. Let's take up the next query then. This is coming in from Jagga Jagdish, and he wants to know your thoughts on IRCTC. Now, some of these rail counters, have come off quite a bit, and after the kind of rally they saw last year. But the likes of RVNL and all have been bagging a few orders, and things are looking pretty bright when it comes to their order book picture. Would you advise investors to look at any of these rail counters now, IRCTC, RVNL, and the likes?
See, specifically for RVNL, we are bullish based on technicals because the stock is forming some corrective pattern, which is like going to end somewhere between 60 to 67 levels. And after hitting those levels or maybe consolidating for furthermore some more time, we can expect some rebound. So it's a buy certainly at current levels. We are expecting stock to move towards either 80, 85. So again, it's a decent risk reward ratio for buying at current levels. But for IRCTC, I think we need long-term view. The stock has fallen to its extreme support levels, but it is not rebounding. So we may see some correction, but in the long run, certainly these are the levels from where we can expect some upside.
Right, so that's the call on railway stocks. RVNL better placed than IRCTC now. We have a couple of queries coming in on Muthoot Finance. Suresh Shankar and Prabhu both want to know the long-term view on this stock. Gold prices have been shining bright. In fact, gold prices back home also hit that 60,000 per 10 grams mark. And on the back of that, Muthoot and Manappuram have been rallying. In fact, Muthoot Finance has gained somewhere around 7% of the last 5 sessions. Time to ride this rally now, Shrikant?
I think, see, like all the stocks have fallen to their crucial levels, and we can expect some rebound, maybe 5% or 10% from current levels. But again, it completely depends upon how the price moves in the international market. And that's the reason our view is that it is better to stay away from taking any position in either Muthoot or Manappuram. There are like other companies or maybe bank stocks which are like available and which are into this gold finance. Federal Bank looks really good because the bank is having diversified business and it is currently available at decent levels. From here again, the stock can move to the levels of either 150, 160. So the confidence is more on the Federal Bank as compared to Muthoot Finance or Manappuram, and that's the reason it is better to stay away from the stocks.
Right, stay away from gold loan finance companies for now. The next query is coming in on a company or on a stock from the metal space. Suryakanta Mahapatra has sent in a query on Hindalco. Now, he holds shares at a purchase price of 474. And of course, he's now running into losses because the stock is somewhere around 390 rupees or thereabouts. He wants to know whether he should be averaging at current levels. Shrikant, in recent times, a lot of these brokerages have turned positive on the entire metal space, given their underperformance vis-a-vis the global counterparts. And most of them have a buy rating on some of these counters like Tata Steel and Hindalco. What would you suggest? Should Suryakanta look at averaging at current levels?
Yeah, I think if there is a long-term view, then certainly we should look for adding this stock at current levels because the investor bought at higher levels, somewhere close to 470, 480. Now it is down more than 15-20% from the highs. So certainly it's a buy because in the long run, we are expecting metals to do well while looking at the entire, the way our economy is expanding. I think we should be buyer in Hindalco. And brokerages are like turning positive more on the steel stocks, on the steel stocks. So there we like Tata Steel, which is currently trading at 104, 105. On the high side, we can see the levels of maybe 130, 135 in the medium to long term. So certainly steel stocks are also on the watch list to buy for, but Hindalco should be certainly buy at current levels.
Right, so that's the call. I hope that answers your query, Suryakanta Mahapatra. Next query is on DMart. Sudhanshu Patel has written in. Now, DMart has come off quite a bit from its all-time highs. What should one do with this counter now for the short and long term both?
I think after falling from the levels of 4,500 to 3,300, it is very close to its long-term support levels. In the past, whenever the stock has fallen to these levels, I mean to say in the month of June 2022, the stock was somewhere close to these levels, 3,200, 3,300. And in the past, when there was a rally in the stock, it was finding difficulties to cross the level of 3,300. So certainly there is like huge amount of support or fundamental value somewhere close to these 3,300 levels. So it's a buy with a medium to long term view.
Right, so DMart is a buy for the medium to long term. Next query, Satya CK has written in and he wants to know your thoughts on Blue Star. How would you advise investors to look at some of these companies like Voltas and Blue Star now? Would you expect more upside given the fact that summer demand could play out well for these counters?
See, for Blue Star, one thing is very clear that they are doing really well in terms of fundamentals. Based on charts also, the stock is forming a higher top, higher bottom series. And based on that, we are expecting stock to move further in the long run. Certainly in the short term, because of this specific news flow on the normalcy of the monsoon, we saw some rally in both the stocks. So we may see some range bound sort of activity in the short term. But in the long run, if really like somebody want to invest in this particular sector, then I think Blue Star looks really good to buy even at current levels.
Right, so Blue Star looking attractive at current levels. Next, let's take up the next query on TTK Prestige. This is coming in from Rahul Lokanini and he wants to know your thoughts on this counter. If you look at TTK Prestige, that's lost somewhere around 30% in the last 6 months and it is trying to come off its 52-week lows now. Do you think the sell-off in this counter is done now and one should look at it at current levels?
Yeah, I think, see, in the past almost 12 months, all those stocks which were trading with high multiples, they fallen badly, or we saw some profit taking in these type of stocks like DMart or Page Industries. They were like doing well, but because of their expensive valuations, we saw some correction or profit taking. TTK Prestige is also amongst the same, and I think we are of the view that it is very close to its support levels of 650 or 700. It is currently at 700 levels, but again, we should be a buyer with a medium to long-term view, because in the short run, if we see furthermore correction in the market, then all these stocks are going to see some more correction. So keep a view of at least next 12 months, then only we should be buyer. We should look for adding them at current levels.
Right. Keep a time frame in mind when you look at these stocks. Let's also take a query on Reliance Industries. Chiranjit Bera has written in and he wants to know your thoughts on Reliance. Now, we did see a lot of weakness set in the stock, but a lot of brokerages have turned positive and some of them are expecting upside to the tune of 30 to 35% going forward. It was a gainer in yesterday's session. Do you think that trend has reversed now and that stock is, headed higher from current levels?
It is very difficult to say that whether the trend has reversed or not, because it is a part of Nifty 50 and having huge weightage in the Nifty. So if we see correction in the market, then Reliance is also going to correct. But while looking at the broader formation, I think the stock is available at its long-term support levels. In the past, most of the time, 2100, 2150 acted as very good support for it. In the month of March 2022, I'm going to say exactly 1 year back, the stock was exactly at 2200 levels. And from there, we saw the levels of 2800. So certainly it's a buy with a medium to long-term view. Yes, we can see the levels of 2500 in the medium term. In the long run, we are expecting stock to move towards 3000. So certainly it's a buy.
Well, buy call on Reliance coming in. With that, I think this wraps up our query segment for today because we're running out of time. But before I let you go, Shrikant, leave us with some of your stock recommendations for our viewers today.
Yeah, sure. I think, see, in that space, I would like to go with two stocks which are really doing well in terms of their overall performance. ICICI Prudential, which is currently trading at 427, 428, is looking strong. It's a buy at current levels. It has formed some double bottom sort of formation. Huge amount of volume-based, delivery-based trading is happening in the stock. So from current levels, the stock can move to the levels of 500. So it's a buy at current levels with a stop loss at 410. It is for the short-term traders. And also, we like HDFC Bank, which is currently trading at some 1575, 1518. We feel that the stock has completed its correction. Now, if we see any rebound in the market, then this stock should do well. We can see the levels of 16, 20, 30. It's a buy at current level with a stop loss at 1540 on the downside.
Well, those are the two recommendations coming in from Shrikant this morning. Well, thanks a lot, Shrikant, for taking out time, joining us and addressing so many viewer queries this morning. Well, with that, we are completely timed out on this edition of Morning Trade, but don't go anywhere because coming up next is opening bell. So it's a goodbye from me and the team that put the show together.